The halving event is in less than 48 hours and people's emotions are starting to fire up. In today's video, we are going to be discussing a chart that has never been discussed before. This chart has particular significance in determining why the price action is still macro bullish, the invalidations of the macro bullish argument, and even assessing pre and post halving price action data. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope everyone's having an excellent day today. In today's video, we are going over Bitcoin's short-term price action in extensive detail, as well as discussing historical price action in terms of pre and post halving data. We'll also be jumping over the macro charts and going over all the most important things you need to know moving forward. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and the structural information, no hype, no BS, no emotion, pure raw TA. That is the kind of content you're interested in. Join us over on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us over on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Not only will you get access to our main VIP channel where we post all of our trades, you'll also get access to our group chats, our general chat, our trading chart and education chat, our help, our daily video, our trade, and our news chat. If you're interested in access to all of that, contact us in the pinned comment of the free channel. For more information, you can click these links or contact me via this name. Let's go ahead, guys, and jump on in. So in the last 24 hours, Bitcoin has seen that sweep toward the downside. We discussed this a couple times over the last few weeks. We told you we saw deviation toward the upper side of this range, and generally when we see deviation on the range high, on a horizontal range or horizontal channel accumulation, we generally see deviation or equal and opposite reaction on the range low. So we have actually seen deviation below that $60,000 region into that mid to low $59,000 region, and we have had a small reaction, a small bullish reaction, a small little bounce since then. We're going to be discussing in a lot of detail today what this means and what we expect moving forward. Are we going to see a proper reversal from here? Or could we see an extended correction or even another liquidity grab underneath that $60,000 level? Before we do get into Bitcoin, let's jump over to the market data. So 24-hour volume is down 3.7%, sitting at 189 million. 24-hour liquidations are up 3%, sitting at 220 million. So again, 189 billion liquid in 24-hour volume and 220 million in liquidations. We can see that volatility is starting to dry up a little bit, and we can see that volume is starting to fall down a little bit. With that reduction, we can see 161 million long liquidations and 58 million short liquidations for Bitcoin. And again, as we did drop into that 60 and most particularly underneath that $60,000 range, we did see a fair decent amount of liquidations occur within that region. Moving over to the broader markets, we do have the DXY continuing upwards, and this is of course pretty bearish for risk assets. It is bullish for the dollar, but it is bearish for risk assets. We can see the DXY has opened up right over here. You can just see the small little candle, which is underneath that prior level of resistance, which could be marking the start of a downtrend into our range of prior support, as well as to retest this 2 to 3 week long, or should I say 2 month long uptrend for the DXY. Of course, if we are able to sustain above this recent dead cat bounce area, we could see a continuation to 107. However, guys, while we remain underneath that 106 neckline of resistance, we are expecting retracements back to retest our uptrend and our horizontal neckline of confluence. Moving over to the broad markets, the S&P 500 has broken down below its major short-term support of 5100. We are expecting a continuation downwards here to 5000. Like we said already, any correction that occurs which remains the price above 5000 should be considered overall a healthy correction. We are still expecting macro continuations upwards, provided this range is able to hold as support. And exactly the same goes here for the Dow Jones, retracing already into its major region at 37,700 to 38,000. Provided this area is able to hold as support, we are expecting macro continuations upwards, as only if this level is lost will we then expect a correction to retest that prior 2021 high and the 50 EMA. So a fair bit to discuss today, guys. Like we've said, we're going over the short-term price action in quite extensive detail, going over all of the possibilities and how to prepare for each scenario. We'll also be jumping over to the macro charts, discussing pre and post price action in regards to the Bitcoin 4-year halving event, which is actually coming up in only 2 days. So we do have quite a fair bit to discuss, guys. And before we get into it, I do want to quickly talk about one more announcement that came out from the Federal Reserve, specifically Jerome Powell, talking about how higher inflation than expected could potentially lead to a delay in rate cuts this year. And we know that we were expecting rate cuts initially in the first 2 quarters of 2024. That has now been pushed back to potentially around September. And it is unsure whether or not this new press conference, this new article that was put out, is referring to the already given statement that rates were going to be delayed until the end of Q4 of 2024, or we could see a further pushback into 2025. Needless to say, this information is neither good, nor is it particularly bad, as until we get confirmation that the rates are not going to drop, the market is generally going to hold towards that bullish narrative, which is interest rates in a future period will be reduced and the market is going to stay relatively bullish. However, if we see this developing narrative continue down the line to the point at which we actually do not see rates drop, or a new narrative indicating that rates are going to drop much later than expected, we could see the market correct on the short term to account for the drop in, or should I say the increase in perceived systematic risk in the market. A narrative to pay attention to. We'll discuss more in later days. So a quick word from Bitget and BingX and we'll jump into Bitcoin. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump over to Bitcoin. So like we said, the halving event is happening in less than 48 hours. And the halving event is a massive event for Bitcoin, and particularly this cycle, it feels as though the halving event is much more widely anticipated. A lot of people are tuning in for it. A lot of people this time around have a lot more expectations for what they expect the price action to do on the day of the halving, and this could lead to a more emotional reaction on the day of the halving. So I'll put this public service announcement out and say, moving into the halving event from now into the next 48 hours, it is important to be aware of your risk. It is important to expect potential volatility so you do not get chopped up, you do not get liquidated, and you're able to manage your emotions a lot more clearly in a period where we do expect emotions to be high, and as a consequence, we do expect price action to be quite sporadic and quite volatile. So let's take a look at the price action for what it is. And what we can see here as of right now is we do have a nice horizontal consolidation range. This wouldn't be the first horizontal consolidation we've seen on Bitcoin. We've seen many horizontal consolidations over the last year and a half since those 2023 lows, but this is the major horizontal consolidation range we are in currently, which is going to be a main determining factor in whether or not Bitcoin will continue through the upper level of macro resistance into new price discovery and the parabolic phase, or whether or not we're going to see a breakdown of our current support level, which is going to be the range low of this consolidation, and an entrance into an extended correction which could last another month, a few weeks, who knows. So a very, very important range indeed. So let's discuss the key levels and what is happening and then break it down from there. Currently, Bitcoin is moving sideways as it has done since the start of March 2024. We're looking on about nearly about 3 months. We're coming up on about 2.5 months now. We have been in this range. Nearly 2 months now. We have been in this range, about 7 weeks. So quite a long consolidation for Bitcoin. This range is quite a steep range. We're looking at around 20% range. With these large ranges of consolidations, we see large movements. So if you have a tight consolidation, the result of that tight consolidation is going to be a smaller expansion or again correction. If we see a larger consolidation, the reaction is going to be larger. We generally see larger reactions. And this is why it's so important, guys. If you look at the range over here, we have a 25% range. If we do see a breakdown from this region, that could result in quite a violent correction. But on the flip side, if we see a break upwards, that is going to send us into price discovery, and we're going to see a large move toward the upside. So we have a very, very determining factor, a very, very determining range here that is of utmost significance in regards to the macro price action. So everyone should be paying very, very close attention to. So to lay out the obvious, first and foremost, guys, we have seen a deviation toward the top side. We've now got deviation toward the bottom side. For this range low to support to be broken with a degree of high confidence, remember, with a degree of high confidence, we are looking for a 4-hour close below our sell side liquidity, which is sitting at a price point around 59,100-ish. So a 4-hour close below that local sell side liquidity, that low range of the current high time frame consolidation, would indicate we have sustained price action underneath our area of support long enough than what we have seen in the past 7 weeks, which will give us a higher degree of confidence that we would expect the price action then to continue lower. Where would we expect the price action to go if that would develop? We are looking at our prior visible range volume profile support areas. So again, we're looking at this 56 to 57,000 region. We can see this area was a small area, a small little pause in that leg upwards, which could provide an area of support as we do have historical buying and selling occurring here, which again could provide an area of which Bitcoin could slow down and reverse or find temporary support if the price corrects into. The next area would be, of course, this major area of horizontal consolidation. Again, another horizontal consolidation, a much smaller horizontal consolidation range over here in comparison to what we are seeing over here. But you can see another scenario or another example of these horizontal consolidations. This would be the next area of support according to the VRPV, which is around a 52,000, 53,000 range if we were to drop below 56. Now, it is important to note that support is support until it is not. So the probabilities in favor of continuations, provided this area is able to hold, the invalidations for that are very, very tight. If we are looking for a continuation upwards, or at least sort of price action to turn bullish on the short term, we need to see a couple things. Number one, we need to see the price break over that midline, which is going to be that prior lower high, okay? We need to break above this midline over here, and we need to see obviously a break out of this downtrending diagonal resistance, which is represented by that black trend line. So we can see a break of that prior high point, okay, and a break of that downtrend. That will give us indication that we are very likely to come up and retest this level of resistance. And if we retest this level of resistance, we are expecting a break upwards, because if we were to retest that level of resistance, it is very, very likely upon the retest, we would have already seen a positive RSI shift, a positive momentum shift of the overall downtrend, which is a reflection of momentum since that 60K break in. This range over here, the range we are looking at, this horizontal consolidation, the RSI over here is a reflection of the momentum within this range. We can still see we have negative momentum, therefore we have negative strength. If we do break upwards, we have positive strength, we are likely to break through that area of resistance. So again, for us to retest and break through this upper level and continue into price discovery, we need to see a break of this downtrend, and we need to see a break over this prior local high point. For all of that to happen, let's go down to the smaller time frame and discuss what we need to see. So we're jumping down to an hourly chart over here. We can see Bitcoin is still very much laddering in this short-term downtrend. We have a much shorter time frame downtrending trend line, which is represented by this downtrending trend line over here. We would need to break above this trend line. Of course, we're going to need to have to find support on our area of support at the 60 to 59k region for all of that to develop from. As of right now, if we zoom back to a 4-hour chart, we can see some early signs of the buyers stepping back in. Again, we can see the RSI is pushing upwards over here. As the price action, as the price action is pushing downwards. So we do have a bullish divergence developing over here, and if we equate this downtrending diagonal with our downtrending diagonal over here, support, we have a potential wedge pattern developing into an area of support with a bullish divergence. So we do have indication here that buyers are stepping in at this support and they are trying their best to reverse that price action. However, we have now seen a small bounce, but this bounce has not been strong enough to indicate a reversal has developed from this area of support. And until we see a reversal develop, again, which we would need to see a break of this downtrend, we are still open to the fact we could see one more retest of this 59 to $60,000 level, or worst case scenario, we could even see a liquidity grab underneath this level into this 57 to 58k region before a continuation back upwards. So pay attention to all of these scenarios, mostly watch our sell side liquidity, be very cautious moving into the next 48 hours of price action, as we are entering now a period of a widely anticipated event. And with this widely anticipated event, we see a lot of emotions. And with a lot of emotions, we see a lot of indecision. We see an inability for the price action to really make a decision in regards to where it wants to go. With that, as an extension, we see a lot of chop, and we see a lot of liquidity moves. So if you see a lot of volatility, do not just act on a candle, wait for confirmation of those moves before you react. Don't just act from a point of fear, or don't just act from a point of euphoria. Acting from emotions, whether it be a fear or euphoria, are equally as bad. Okay, let's go ahead, guys, and move on to the macro price action. So like we've said many times in today's video already, we do have the halving event coming up. Now, historically, the halving event has actually been a non-event. We haven't really seen much reaction at the halving event. If we look at the first halving, we saw, again, at the dead of the halving, we saw following that, like 4 weeks, this is a 4-month period of almost no movement in the price action, pretty much just sideways consolidation following that halving event. But eventually we did see that continuation upwards. The most important thing, we eventually saw that continuation upwards. Moving over to the next halving event, upon the release of the halving event, we saw a green week, but following that we saw a few weeks of actually downtrend following the halving. But again, most importantly, we eventually saw that macro continuation upwards after the halving event actually finalized, which you can see represented by that uptrend over here. And moving into the prior halving event, once again, guys, we saw not all that much price action occur around the halving, more or less sideways, but most importantly, after the halving, we saw an extended continuation into that bull market. Now, what do all of these scenarios have in common? This is the most important thing. What all of these scenarios have in common, whether it be, the first halving event, the second halving event, the third halving event, or potentially this current halving event, the price action at no point broke underneath, the low short EMA of the pi cycle indicator, the green line. Let's take a look. The green line. Did we remain above the green line? In this instance, we did. We remained above the green line, so we never actually broke back below it. Perfect. Let's go back to our prior instance. In this instance, did we remain above the green line? We did. We never broke, but we never closed below it. We remained above it the entire time. Perfect. And in our first halving event, did we remain above that green line? Well, we can see in this instance, we did not even test it. So again, guys, that is the commonality between all of these events, which means that if we were to break underneath the green line, that would be a disruption in the prior historical data. That would be something that hasn't occurred before, which would be a bearish event. So where is this green line sitting? This green line is sitting at 53 to 54,000, and therefore we would not expect a weekly candle close underneath 54,000 again until after the all-time high. That also means that if we were to see a weekly candle close underneath, okay, the green line, that would indicate the top has been in. If we look at all the times we saw weekly candle closes, should I say, below that green line, the only time we saw a weekly candle close below the green line would indicate the top of the cycle. Okay, will indicate the top has already been in. So if you go from over here, the halving event, the next time we saw a close below the green line was over here, after that bull run. If we look at the prior cycle, we didn't close underneath the green line until again, after the top had already been in. And once again, if we look at the prior cycle, exactly the same thing played out again. So if we do see a retracement back to 52, 53, if we saw a weekly candle close under that 54 point, that would be catastrophic. However, provided we remain a weekly above this green line, we are expecting macro continuations upwards, regardless of what happens in the short term. Now, moving back to this chart, yes, it would not be ideal, right, for Bitcoin to break down and continue lower. It wouldn't be ideal. We would obviously like Bitcoin to remain here and continue upwards, and it would be a lot easier. We'd see the continuation happen sooner, and everything will be a lot more profitable, right, in terms of your spot bags. However, sometimes the market doesn't really react in the way we want it to react. We have to zoom out and look at, well, where are the invalidations really sitting on the higher time frame? So one of the invalidations would be a weekly candle close now underneath that 54 to $53,000 level, which means Bitcoin could theoretically see a correction down and bounce above for the weekly candle. This is a possible scenario, and even if we were to see that, it is important to note that based on historical macro data, that wouldn't actually invalidate the upcoming parabolic waves, which is still expected. Thank you for watching. Have a fantastic day. Catch you in tomorrow's video. Cheers.